Ethan, you brought up a very good point. I keep asking, why are mega caps so strongly represented in these ESG funds? Your point was that reporting, they do better reporting than everybody else about what they're doing. And there's a certain lack of transparency when you get further down the food chain, I think. I think that's a very good point. What, if anything, and Marvin, this is addressed to you, what can we do to get companies be more transparent so we can measure this a little bit better? I keep complaining that part of ESG is a lot of this falls into what we call qualitative research, which is very difficult to put numbers on, to quantify in a way. So Ethan and Marvin, both of you take a shot at this. What can we do to increase transparency around these issues?
Yeah, I'll go first. I think it's important that we make the case that by engaging with an organization like the NAACP and being more transparent about what's happening is going to sort of increase their opportunities in the market. The priorities, and I think that the kind of engagement that's kind of resulted from this fund for us as the NAACP has resulted in companies wanting to talk more about what can we do to change, what can we do to improve in these areas around supplier diversity and recruiting more diverse candidates for C-suite opportunities. It's the engagement that has allowed for improvement.
Marvin, you were breaking up a little bit there, but I think we got the gist of what you were saying. Ethan, you wanted to make a point too?
Yeah, and Bob, I think I would just echo what Marvin said, but what we're trying to do here is provide incentive for corporate America to report, because I think it's one thing to be in an ESG fund that is trying to be all things to all people, because it's hard to communicate what that actually means. It's a very different thing to be able to say, we are in the NAACP Minority Empowerment Fund because these are the 10 things that the NAACP cares about, and we do a better job relative to our competitors, right? So our goal is to have inclusion in this fund become a compelling point of differentiation for corporate America, and that's when it starts to justify the cost of compiling and reporting some of this data, because if not, you're going to get left behind by your competition in a world that is increasingly difficult to separate your products and services in.
Yeah. Ben, this is a very slippery subject, but take a swing at it here. I mean, for me, social investing is the most difficult of the ESG to really define. It's pretty broad. I mean, what's the criteria that you're using? Is it how you treat minority employees, for example? Is it how much money they donate to the social justice causes? Is it how much weighting should be given compared to other social issues, or against environmental issues, or against governance issues? You can get different outcomes. Some companies will include oil companies in their ESG, even though other companies consider oil companies not to be involved. Some people want oil companies that are the best ones doing the least polluting, for example. I'm using a little environmental, but social is a really tough one to define.
Well, Bob, I would argue they're all very tough to define, and really the devil's in the details. And the details depend on the provider of the data, the supplier of the data in question. So it really is incumbent upon investors when they're looking at all of these different funds to dive into the specifics. And if they see an oil fund in the portfolio, they might be scratching their head, but that might be one of the better actors among all of the different oil producers that's out there. They might be investing at the margin to increase their exposure to clean energy and renewables. So, it gets back to the fact that this is very definitionally dependent. For all intents and purposes, it's a form of active management. It's an active construct. So investors need to know that every portfolio is going to be distinct, that it might get you various levels of ESG-ness from watered down to very potent, and that you're going to get something different from the market over a long period of time. So again, if we look at where the vast majority of money is now in these funds, it's invested in those funds that have the highest financial beta, right? So they look the most like the stock market, which explains why you have a regular showing from all of the mega cap names that we all know so well. That will continue to evolve over time. I think the choice in this space will continue to evolve over time because, my ESG is not your ESG, is not the next guy down the road's ESG. It's a very sort of personal topic. So I think you're going to continue to see an evolution in the space and more choice, be it in terms of broad spectrum ESG or funds that focus on more narrow issues like NAACP.
Yeah, it's always interesting that Occidental Petroleum always shows up in these ESG funds that include energy because it, by the criterion that are normally used, particularly on environmental, Occidental does better against various metrics than most of its competitors. So there it is, and yet people say, why is Occidental there? And I say, well, they're less polluting. They're more environmentally friendly than their other competitors that are out there in the same space, essentially. Marvin, I'm going to give you the last word here. Of course, every investor wants to know, I want to do the right thing. I want to invest in socially responsible, socially just causes, but I also don't want to lose money. Have you been heartened at all, or what's your reaction to investors as we're grappling with these issues of social justice? Do you see a real awakening? And I don't just mean on the social front. I mean actually on the investing front. Do you think that this could actually make a sea change, a real sea change in difference? ESG has already been moving in this direction, but that this could push it even further and more carefully define the boundaries of what constitutes ESG.
Oh, I absolutely think so. And I think in the current environment where everyone is kind of trying to figure out how can I get involved, what can I do, capital has the power to make social change. And I think that theme is something that we're seeing get played out as investors began to look. I mean, this has been more than 10 years now, where investors were making decisions on their investment based not only on returns, but on the quality of the companies that they were investing in, by their commitments to sort of environmental issues. Now, the same thing is beginning to happen on social issues. And I think when it comes down to investors influencing what's happening, I think the truth is it's going to happen. I think the reality is investors are going to be able to push a process that results in real change on a social justice. And I think companies are getting the message as well, because as they really grapple with how to show up the right way in this moment, they're being challenged by the NAACP and other organizations to make sure that the rhetoric that they're using around making commitments, public commitments to stand against racial discrimination, is actually getting played out and lived out in the way they do business internally. I think this is really a watershed moment, and I think we're just at the beginning of it. I think investors are going to be raising their voices in more powerful ways in the future around social issues.
Yeah, I agree with you, Marvin. I think this sounds like something that actually is not something we do for a week and then the news cycle overtakes us. This has a feel of more permanence to it. I hope that is the case. Long overdue. So thank you. That's a very good point to end on.